Hello and welcome to the next lesson. This will be about banking products and different types of services and goods that banks offer you. Firstly, loans. It's when you receive money from a friend or a bank with a promise to give it back with interest, which means to pay it back but with an additional amount. Monthly installment or EMI. A monthly installment is made by a borrower, and what it does, instead of paying the total of something in one go, you pay it over a split duration of time. It could be months or weeks, and it can be even years for some houses. Next is peer to peer lending. This is when businesses and individuals give money to each other and as lend them, and making banking without the actual banks and becoming more independent. Peer-to-peer lending has many pros, such as the online process, less documentation, quick disbursement, all types of loan products, loans from individual people, and lower interest rate. And these are just a few of them. A check. Check contains the name of the person whose the amount is to be paid from, and the person who's paying the money has to sign the check. So on a check, if you write a certain amount and you write your name and then that person signs it, then when you cash in the check at a bank, the bank will transfer that funds to your bank account and remove it from their account. Cards. Debit cards. Debit cards are things that let you buy things without actually carrying cash. These are thin cards, and this is your own money, a debit card. A debit card is yours and you can't borrow on it. Whilst a credit card is almost exactly same looking, but the difference is that you can now borrow money for your purchases. You may wonder, what's the point of borrowing money and paying it back with a risk of interest if you do not pay back on time? This is credit score, because when you use your credit card, it gives you a better credit score. And a credit score is a number between 300 to 850 or 900 sometimes, and that shows how credit worthy is someone, meaning how likely are they to fulfill a loan. And a credit score is useful if you ever want to take a loan. They have certain requirements. If you are less than that, then you will be rejected a loan. So it's always good to keep your credit score up. What is the difference in the cards? If you have no money, then a debit card, you can't do anything. But on a credit card, you still are just borrowing money and paying it back without interest, unless you pay after the monthly fee. Insurance and its products. Insurance is a mean of protection from money loss, and it's a way to save huge amounts of money. When you buy insurance, what you are buying is protection against anything. How does it work? Let's say you're driving a car and it crashes, which damages your car. If you have that type of, let's say, repair insurance, then they will pay the cost of the car repairs and you don't have to pay anything. There's many types of insurance, and some of the most important being health insurance, as people are awarded large sums if they pass away, in life insurance, car insurance, and property insurance in case something happens to a property. Thank you, and stay smart and achieve your financial goals.